Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio or a beginner taking those first steps, this podcast is for you. Today on the podcast, we have Natasha Phipps. Really excited for today's conversation. I know you have a lot on the go. Realtor, I believe you're involved in a private real estate investment trust,
yes,
property management company. So you have quite the history. Maybe taking a step back, how'd you get into the industry? What's the story behind that?
Yeah, thanks for having me. First of all, excited to be here. You know, I was very fortunate how I got into the industry, but I got addicted to real estate quite young. My family business, my parents' family business is in construction still today. We do a lot of exterior finishing in the new construction space here in Calgary, hundreds of houses a year that they do. And my dad was the kind of guy who's like, I'm going to teach you everything I know about running this company. And, you know, once you hit a certain age, that's it, kind of you're on your own. And then my mom came from a banking background and I grew up in the country. And as soon as I moved to the city, it was like, we're not paying someone else's mortgage down. We're going to pay our own mortgage down. And that was really kind of enlightening. Then it was also very easy to get a mortgage. Totally different world. But I had bought and sold my first investment property by the time I was 20. And started buying and selling at the time. You could not make money then. And through university, I was working in the oil and gas industry, hated it, hated working in office every single day and the kind of monotony there. And after I got my marketing degree, I was doing very well, just buying and selling, and got my real estate license and really wanted to focus on the investment space. Then there was just not the accessibility to information we have today. And so what I had learned along the way, I really wanted to share. So that's really how I got into the space. I was very fortunate to kind of have two really good parents who taught me a lot, but then also pushed me a lot as well.
Cool. And has it always been Calgary that you've participated in investing in real estate?
So no, we haven't. We, as in my husband and I, we've had investments in BC, Alberta, and Ontario over the years. Done a lot of different strategies. I was also a licensed realtor in Penticton first. Before we had kids, we thought we would, go try out the Okanagan. Couldn't make any money there. Came home and have been here ever since. But yeah, we watch the markets everywhere else, like everyone does, and I've got a lot of contacts in the industry. So if something makes sense, we do look outside of Alberta.
That's awesome.
Cool.
So started off single family, I'm assuming that the first one, and
yes,
maybe able to give an overview of what that kind of looked like over the years. Of what
the evolution of your
asset types,
of your career and investments.
Yeah, I mean, started in the single family space, given the access to new construction opportunities with the family background made a lot of sense. And so was single family homes, condos as well. Condo conversions were a big thing happening in Calgary at that time as well. Made some good investments in that space. And then when I met my husband, we started doing more active things. We were building infills. We did, flips. We did secondary suites. We owned some small commercial property, student rentals in Toronto, and pre-constructions in several cities. Like, we've done a lot of different things. And the biggest thing through all of that is I've always tried to look at the market, what's happening with the economics, and applying the best strategy at the same point in time, right? And that has been kind of the biggest teacher, I think, over time. And then most recently, 2.5 years ago, we wanted to get into the multifamily space. I have a good network out there in the real estate investing community, and we got into the multifamily world 2.5 years ago, and have acquired 3 multifamily assets in the last 2.5 years, and have just
existing properties.
Yes, 2 were court sales.
Okay,
new or newish. We're not taking big risks. We're trying to remove as many variables as possible as you can with the private REIT, and so just buying good assets in good areas, managing it well, and we have just under 300 investors in that fund now, and we're excited to keep growing that.
And for the multifamily, leveraging the MLI Select financing?
I have a love-hate with the MLI Select. We do have one MLI Select, but I'm a big fan of the MLI Market route, where we don't have the affordability restrictions. So the
Right.
MLI Standard or MLI Market is what people refer to. So the last two we've chosen to go with the MLI Market, just to have the flexibility. I am concerned as a realtor about the MLI Select and how that's going to translate in the market in 3, 4, 5, 7 years, when we're really locking in decisions that will be there for 10 years. So
Right.
I think that's going to be an interesting, thing to watch and see how that shakes out, because it has to be assumed. It has to follow the property. So.
And with the MLI Select, it's a 10-year commitment
For the affordability.
Wow.
Mm-hmm. Yeah.
Wow. So
that's it. We all think we're obviously well versed in real estate, but no one has a crystal ball for 5, 6, 7 years down the road, right? And then so if you want to sell that asset, my favorite thing about real estate is that it gives us so many options of exit and leverage and what you can do with things. And so when you're locking those things in for that long of a period of time, I do think that takes a lot off the table in terms of options.
Mm-hmm.
For sure.
Mm-hmm.
So you'll deploy various strategies depending on market conditions and various external opportunities presented. Outside of them being really profitable, what have been your favorite strategies to work with and deploy?
Two kind of sides to this coin. If I had all the time in the world, I love doing a project. I love to see something be built and created. In business period, I like to build. I like the creation of something. So certainly we have really enjoyed the projects that we have done and got a lot out of them. But my largest kind of takeaway is always, there is no kind of bad market. It's what is the best strategy for this market.
Right.
And now kind of what's really exciting about what we're doing now too is starting to achieve those economies of scale as we grow, which is really exciting too. But in the residential space, the most safe, easy, predictable strategy in Calgary has been secondary suites.
Yeah.
Buying
secondary suiting and refi or sell.
Exactly. They're just hold. They've done well in everything Calgary has thrown at us. They've even appreciated through some of Calgary's most difficult years, and are what we need in terms of rental inventory. So I'm a huge fan of secondary suites on the residential side. Yeah.
And what's great about Calgary for listeners who aren't active is there's so much product available. Like there are so many bungalows in really great areas that the city has made it relatively easy to legalize suite, and the banks recognize that, and you can get good financing options, and to Natasha's point, creating inventory out of nothing, right? Creating 2 doors out of 1, which I think is really important to help solve this affordability issue that we have.
Yeah, and from the investor side of it, it reduces your risk, right? If you have one vacancy, you may have something else coming in. Like very rarely you're going to have both leases ending on the same date at the same time and have, turnover at the exact same time. So it does reduce your risk a little bit to have 2 streams of income on one address.
Mm-hmm.
Very true. I know during obviously the history of Calgary, there's been quite a turbulent market. Do you have any tips for how you manage risk with your real estate portfolio to ensure?
Yeah, I think you have to look at what is the most volatile sector of any market, not just Calgary. And we're seeing this in other markets in Canada right now. If you can get into the market and stay away from condos, I always suggest that. Sometimes that's just price point. That's all you can do. So if you're going to be getting into the condo market, you need to be even more strategic, like highly strategic, know your stuff really well, and be working with someone who knows the city and has been here through everything the city has thrown at us. So that's a big thing. And it's just pure numbers, right? Like if you have hundreds of units in one single location and things shift and change, you're going to see more volatility there. And we're even seeing that right now in Calgary where these new buildings are coming on. We've got, I think we have one listing right now in a building where there's 26 other listings. Like it's just because of sheer numbers at one time. So
hard to absorb all that.
Yeah, it's just you just
particularly
have to
if you're in a location that maybe doesn't have that desirability or that population capacity at the moment.
Yeah, it just takes time to absorb it, right? So if you can get in the single family space, I think that reduces your risk a lot. It also gives you the most options of what you can do with this property. Like we have a lot of clients who we've suggested switch, converting one unit to a furnished rental, for example, doing short-term rentals possibly. And you can do that in a single family home that you run and control. When you're in a condominium, you're really restricted by the rules, right? So that's kind of the
you're
first
very
two things I
hamstrung
talk about.
'cause-
Yeah.
Makes sense. And what was the reason to get into multifamily?
Well, first of all, it's always the real estate that comes along. The first acquisition that we acquired, the Bergen, I heard it was coming through the courts, and it was kind of one of those assets where like, how did this happen? Like, it's an amazing asset, only 2 years old, in Mission. Like, this is a fantastic opportunity. But buying a multifamily asset through a court sale is a very different process than buying a single family home. And so but I was like, this is a slam dunk. This felt like a slam dunk to me, the one I'd kind of been waiting for that was going to kind of push me to take that leap. And so really that's what it was. Like, it's finding what you're excited about, right? And I was really excited about this opportunity, learned a lot. And, we raised the money for that acquisition in like a single Zoom meeting. It was something everybody was excited about to get on board for. So like anyone that gets into multifamily, you want to be accessing the financing opportunities that are out there. Interest rates are so challenging right now. And going with CMHC insured debt, you're dealing with the bond rates, not Bank of Canada rates. So that's a huge benefit we've all been struggling with for the last couple of years. And then just, stepping up into that economies of scale and how can we kind of take what we've been doing to the next level.
Mm-hmm. So you find this property, it's a court order sale. Are you able to share any of the numbers in terms of like purchase price, buy and hold, cap rate, any?
Yeah. So we got it for just over $8 million. Really crazy process, sealed bids. It's just like, and you're also not getting the full due diligence like you normally would with a court sale.
As is, whereas no representation or warranties.
No, nothing.
Yeah.
No, we didn't even get security deposits. Those were stolen as well.
Yeah.
So learned a lot on the first one. So that one we paid $8. It appraised the following year for 9.325. So we did well on it. Had to, clean it up. There was all kinds of problems. So had it kind of stabilized and refinanced in that year, about a year time period, a little bit longer. The next one that came along was even more attractive. And that was a townhouse complex in Calgary as well, in Windsor Park. 19 townhouses, same idea, same builder even. Went to the courts, was only a couple years old. And that one was kind of same idea, but a little bit higher price tag, and appraised even higher than what we anticipated. Rents came in even higher. So finding these opportunities, right, and then seizing them and taking what we had learned the first time. The biggest lessons we learned in the raising capital space was if you could take registered funds in somehow, and if you could work with investors that were accredited or eligible, it opens up a whole nother world of capital raising. So that's really ultimately why we ended up with the REIT model on the multifamily side, to be able to check all those boxes.
Structuring the trust, yeah.
Yeah,
which is a lot of work to manage. We're, in terms
Massive.
of, as a Calvert Home Mortgage as a lender, is a mortgage investment corporation, and the infrastructure that goes around that, and in order to comply and check all the boxes is really important, and what usually differentiates good operators from bad operators.
Oh, 100%.
So
Absolutely.
on the security side, you learned a lot, which
Huge.
I would expect, because
big bills, lots to learn.
Yeah,
it was huge. And we also had to get our 150 investors during that period of time, which was, we had about a 3-month deadline to get 150 investors into Wealthshare. In that first year, by March 31st, we had to have 150 investors. So it was an exciting time, but it forced us to grow really quickly, to get our message out there really quickly. And, with so much volatility in kind of the passive space in the last year, let's say, we're preaching the opposite, right? Like, we want to be as transparent as possible. We want to also be as accessible as possible. Like, there's plenty of opportunities out there for the already rich. So we're actually trying to be the opposite of that. We want to be accessible, have a low minimum, have a kind of safe, secure way as you can in real estate to invest in these hard assets.
And did you guys do that fundraising yourself, or did you use third parties to support?
Mostly us. Yeah,
Good.
mostly me.
Yeah.
We do have an exempt market dealer because we have an offering memorandum. We have to have an exempt market dealer, but they're more, there's a service to do the suitability and the KYC and everything like that. But like 99% of the capital raising has been done internally.
Internally.
Yes.
Cool.
Yeah. So
So
all 300 of those people have my cell phone. We're like a community over here.
Yeah.
So it's pretty cool.
Yeah. Any other like from an operations kind of real estate investor standpoint, any other key learnings along the way? And maybe not even on the multifamily. Like I'm just really curious about how you've evolved, where you've accessed information, any mentors, because it's such a journey and the information is so still siloed.
Yes.
I'm really curious about that learning path that you've taken and your company's taken.
Yeah, it's something you're always doing, right? I think I'm involved in almost every group that's out there. I, always pushing the needle on what I'm learning and how I can be doing better, and really you have to take the ego out of it. There is no shortcuts. You have to look at kind of really what's going on out in the marketplace. But yeah, I go to a lot of events. I do a lot of networking. I go to as much as I possibly can to be improving what I know and who I know, and learning along the way. But I feel like a lot of people kind of get into it. They learn that initial thing, and then they learn one thing, but that's not going to work forever. That one thing will work well until it works. And then they kind of go, well, real estate sucks. Well, you didn't pivot and adapt and change. That's really the key to success, because every market is going to shift. You're going to see this real estate cycle happen no matter however long that takes. It's going to happen eventually. And so people who tend to get burned in real estate, at least the stories I have heard, is because there was kind of a refusal to pivot and adapt because they really wanted to do flips, or they really wanted to do this one thing in a market that didn't make sense at the time.
Right.
So that's kind of my largest thing. Is it's not necessarily what I love to do, it's what makes sense to do, and applying that at the right time.
And are there any like amazing sources of information? You mentioned, you're at everything, but are there any economic reports, groups, events, books, strategy sessions that you're like, no, this is, because there's so much and only a portion of it is meaningful and good and something that you can actually leverage. Anything that you would want to share?
It is a challenge to get everything in one spot.
Totally.
That's honestly the largest, like people, well, which group should I join? And ones that kind of focus often on like personal coaching and like getting over your fears and getting over certain things often then aren't focusing on the economics, or vice versa. So it is a bit of kind of knowing yourself and what you need. Some people are very, like a lot of engineers get into real estate. They know how to, do the spreadsheets and the calculations.
Yeah, they can run the pro forma.
They get in their head. They need someone to kind of help them get out of that as well, because they get stuck in this analysis paralysis thing too. So knowing yourself, knowing what you need. There is no shortage of support and information out there nowadays. So I think you got to identify that in yourself first. Like everyone, you should be hopefully paying attention to what's going on in the economic world in terms of, CMHC reports, local economic reports for Calgary. I love the Calgary Economic Development website.
Yep.
We use that data a lot in a lot of our presentations, and you can go back and look at things.
And every city will have that data. Like that those municipal economic development groups have just an incredible amount of data that are used by all businesses. Yeah. And I think to your point, it's especially important for real estate investors to understand what's happening with the local economies.
Absolutely. And, the other lesson you kind of keep learning over and over again is who's the best person for whatever job you're trying to figure out. Like what you're not good at, find who the best person is for that job. As a realtor, putting my kind of realtor hat on, I'm always also surprised at how, little care can be given to selecting a realtor. If this realtor is not investing in real estate, if they're not, a lot of realtors do not. that's a very different thing than helping you find your primary home. Can they help you figure out if this is actually going to make money? Is this going to actually make sense? What kind of tenant is this going to attract? Can they help you on the property management side? So finding the best person for the job is huge. And I've been kind of waving this flag as well the last couple of years, where we're seeing Ontario investors investing in Alberta with Ontario realtors that know nothing about this province. And that's not like, I don't expect them to, but why are you expecting them to? Like that's kind of the part that's a bit confusing to me, because, you know, I've seen ads for Chestermere, a community of Calgary, like that kind of thing. This is a totally different city. So finding the best person for the job, someone who's done what you have done before you, like, that's huge.
Yeah, that's a really good point. And even best person for the job will evolve as your business evolves. Like, you might have a great real estate lawyer that's good at single family transactions, but to your point,
absolutely,
you know, buying a multifamily out of distress takes a different skill set.
Yes.
And then as you get into fundraising, you'll probably need a securities lawyer. And as you grow your net worth, you'll probably need some different tax advice. Yeah. And, you know, if you're just to stay stagnant with the same lawyer, and maybe that lawyer will try to help, but really they're not the best expert for that specific subject. So I think that's a really good point. Is they talk about it all the time in real estate investing, that power team, but if you evolve, that power team better evolve with you.
Oh, 100%. Yeah, absolutely. And it should change, especially geographically as well.
Totally.
That's a huge thing.
Yeah. Yeah. Particularly, like, it's crazy that realtors would go into a totally different geography. Like, I could see some adjacencies and maybe, okay, I got a client. Hey, Natasha, let's work with the client. You're the expert. Or, you know, I have an investor group in this geography and they're looking at this geography, but to find the local knowledge and expertise is so critical to success. Although what's worrisome is that in a market that's hot, and that's any market, everybody seems really smart and really brilliant. So you cannot be that expert and leaving, you know, 5-10% on the table and still make money and pat yourself on the back. But when that tide goes out, which it always does, that's where these horror stories derive, and you hear these people who weren't successful because they weren't on it when the times were good.
Absolutely. I've been joking about that for a while. Everyone's a genius right now. We've been here before, and there will be people that get caught. We're kind of already seeing that. So find the best person who knows what this market is like. Calgary is not Toronto. A really good example of that is people investing from afar, thinking they can assign units here. Like, it is very difficult to do assignments in Calgary or Alberta, period.
Even builder contracts, for the most part, don't even allow for it.
And when they do, it still says upon approval, or there's a lot of restrictions to how you can find that individual. So we haven't even done one successfully. We have tried hard for several people, and it's very, very difficult. So assignment is not a strategy.
Yeah. Yeah. In Ontario, we did it. We were shocked at how many assignments there were when we entered 5 years ago, and how it's just that new build industry is completely different than Alberta. And then from a pivot standpoint, what we see is, like, because there's no assignments, these investors will close and then immediately sell. And we love that business. Yeah. But it takes a little bit of money out of their pocket, because they thought that they were going to assign this $30,000 lift at really no cost. And now they're paying a financing fee and whatever 1 month of interest to us, where that reduces their profitability. So you see all these people that didn't understand the market, didn't understand how it operates, and now are not quite as successful. Never mind if they're buying speculatively, which a lot of these Ontario pre-sale buyers do, and they don't see appreciation.
Exactly.
Right. And we're seeing that now in Ontario, but it's just a quick case study on how critical it is to know really what the hell you're doing.
Yeah. Well, and be diversified. Like, if you're putting all your eggs in the pre-construction strategy and that's your entire basket, you know, that market shifts, like, you're in big trouble, right? So it's okay to have a sliver of this, a sliver of that, because often when one thing is going a direction, one will go another. So that's something we talk about a lot as well, is how can we diversify in, even just the residential small portfolio with a few properties. Let's not have them all be the exact same thing with the exact same timelines, the exact same risks.
Right. So as a local expert, outside of, we have this really strong in-migration, economy's running fairly well. Affordability from a broad perspective in Canada is really strong in Calgary. Are you seeing anything outside of that's interesting and exciting to you?
What is most exciting to me right now as a Calgarian, as someone who's, done a lot of business here and lived here for most of my life, is that there's a lot more going on than the energy sector. I mean, don't get me wrong, like the energy sector, we need it, we rely on it. But like it used to be, you'd wake up and I would know the price of oil every day. Like that's how like tied into, we were like, that was like our life. It was like, that's what you would talk about. Now that's not the case. And obviously it's still a massive driving factor in our economy, but it's the diversification that's coming in that's giving me a lot of comfort as an investor, as a Calgarian, even a parent in this city, that we are thinking outside the box, we are changing. And we need that desperately. Like we need that diversification. And there's so much opportunity here. Even on the property management side, the quality of people moving here, the level of expertise and background and education that they're bringing to our city is really encouraging and exciting. And they're wanting to call Calgary home for affordability reasons on the, residential side, but even on the, commercial side of what you can make happen here. So that's something I'm very excited about for Calgary that feels different for the first time in my lifetime anyway.
Yeah, that's really cool. We continue to get younger and smarter as a province.
Yeah.
And by younger and smarter, the migration that we're bringing here is young, educated people who are looking forward to working and setting up life here, which is, to your point, really excited. And that should drive sustainable success outside of the energy sector, which, is great business. The ebbs and flows is tricky to manage, which was one of the bigger reasons that back in 2019 we decided to enter into Ontario, because of managing those cycles and the size we had come to. It was just time to diversify into a different economy that operates differently. So I love your enthusiasm about how our city is growing.
Touching on the property management company, how did that come to be?
So, it's a property management team. So we are a team at CIR Realty. And so honestly, it became out of just the demand, like of the sheer volume of investors that were investing with us here in Calgary, buying real estate from me or my team. And I know as a landlord, as an owner, that is more important almost than what I'm going to sell you as what I think is the best opportunity. How well is it going to be taken care of? And so when I moved over to CIR Realty in 2020, they were just starting the property management division. So I knew, okay, we could operate our own property management team there. Not every real estate brokerage allows that.
Right.
And that was really, really critical. So,
and there's special licensing. Like, I think that's another thing.
That's one thing
that
about
I believe
Alberta
differs than other provinces, is that it's licensed by our real estate council.
Exactly. You need a property management license. I have all the licenses.
And there's
but
trust
I have that
account
one as
rules.
well. Yes. Yeah, absolutely. And so that was really important to us. But really, it's like, our investors that invest with us, I want to build a lifetime relationship with them. And so when we can help them with the property management, make sure that things are being done in a way that makes sense. Our property manager, her name is Una. She's an investor herself. She's a landlord on her own. Like, that's a very different thing than hiring maybe a large scale property management company. They just don't have that level of care in the same way when it comes to the dollars and cents and making these things work and really being concerned about your investment at the end of the day. So that's kind of why we got into it, was to ensure success as much as we could with our investors.
And how many units approximately are you managing?
We have about 80 units in the CIR property management team right now.
Nice. That's awesome.
Yeah, we've never advertised it or anything. It's just like whoever needs help with it, we're there. It's a tough business. Property management is a very tough business.
It's very tough.
It's certainly not, it's a necessary business, but we do it to ensure success of our clients, really. It's a big thing.
I always enjoy and appreciate hearing people's maybe character building days. Do you have a day that stands out that was either extremely stressful.
Oh.
A deal was going sideways and you thought it was all going to fall apart. And any reflection from that day that occurred?
I mean, lots of days. I've been self-employed my whole life pretty well. So yes, lots of days of, and difficult markets. Like we've been put through it here. We've had tough years, tough times, and not knowing where your next, dollar's coming from really at times. But I have really on those tough days, what the lesson I always remember is to think long-term. Nothing lasts forever, but also doing the right thing and thinking long-term with every single relationship that I have. And that has paid off time and time and time again, because you don't know what's coming next and you don't know where the next thing around the corner is going to, be coming your way. So thinking long-term and be transparent when things don't go right, whether that's with a client or with Wealthshare, all kinds of things happen that you cannot predict. And I think people get into trouble when they're scared to admit what went wrong. They're scared to say this is what happened. The reality is if you explain it to most people, what has transpired, they will be understanding if you are honest and transparent about it. So be honest, be transparent, but really you have to think long-term if you're trying to build any sort of sustainable business, in my opinion.
Mm-hmm. Yeah, I love that. I know, from what we see on a daily basis, it's really tough. Even, I guess, me currently right now, thinking in the next 20, 30 years, it's really tough to have that
it's tough.
Mindset of thinking that long term of what's best as opposed to 2-5 years out.
Especially in real estate, because people look at a single month because they had a tough month. The furnace went, something happened, right? You're not buying real estate to cash flow $100 a month. That's not why we're buying real estate. Everyone, when times get tough, we forget actually why we are investing in real estate, and we're investing in real estate for leverage, for debt pay down, and for that long-term net worth growth. That is how you make wealth, true wealth in real estate. You can make short-term money here and there, sure, but the true impact is a positive impact to your net worth, and you cannot get more predictable than a mortgage pay down schedule. You cannot. And so that is really why we invest in real estate. Why the number one thing people need to remember of why we invest in real estate is you're leveraging the bank's money to help make you make money.
Yeah.
So those hard days or you're negative or you need to supplement things or you're not sure, you just have to remember that.
Love that. Anything else that you think would be value to touch on for people who are listening?
I don't have anything specifically. I think just the, largest lesson we've already talked about is aligning strategy with the economic cycle. I think it's very easy to think something's going to last forever. Nothing lasts forever. And so you need to be able to pivot and adapt, and learning the largest thing you can learn is how to apply what strategy when. There is no bad market. It's just, what makes sense right now.
What about because you've managed through really shitty markets, and a lot of real estate investors in Canada are real estate investors who have participated in basically British Columbia, Greater Vancouver area, Toronto, Greater Toronto area, or Golden Horseshoe. And they've had really 20 years of great success and easy times. And now they're just starting to manage through difficult times, or the last 2 years, difficult times. How did you pivot? What got you through 2014 to 2020 in Calgary? What is there any key learnings or key advice that you would share with those listeners?
Make sure you're not isolating yourself when it gets tough, because certainly other people are going through what you're going through, and it does help to have some sort of support in that way, because it can feel like the sky's falling. It can feel like, this is never going to get better, or there's going to be no end in sight to what is going on. And what you will learn in that is you're not obviously alone, but you will also figure out a path forward. And that's what I leaned on during those times. Then it was monthly REIT meetings. We would all get together, and it was, a huge support for that time, what we all kind of needed. But it was also going, okay, where's the opportunity right now? And reminding myself that, because often the best opportunities come when everyone's running this way and you are looking this way. So that's really hard to do when you're scared or you're nervous. And that doesn't mean, don't go take some massive risks that you can't sustain. But, there are indicators to show you what could make sense. So just regroup, take a look at that and see, where is the opportunity? And often it is not where everybody is running to. And when everyone's going this way, you should probably be going this way.
Yeah. Yeah. That's really good advice. And even I think where you touched on earlier in talking through it, learning like why is this not working? What didn't work? Those are the opportunities to better your learnings, yourself, your strategies, and looking for the opportunities in the times of distress. That's where the best that investors earn is when things are really, really not great, and they take advantage of that. Now, it's a lot tougher to take advantage of that if you don't have dry powder, if
right.
you've overexposed yourself financially or in a market. But that in and of itself is a learning.
It is. And you have to take that and learn with it, and also understand and you give yourself some, grace in that you're trying to move things in the right direction. Like even just owning 1 or 2 real estate assets in your lifetime puts you significantly ahead of most people in this country.
Totally.
And so even if you're just doing that, but in this real estate investment space, you can feel like you're always trying to keep up with, everybody else, right? And that is not the name of the game. The name of the game is thinking long-term, and just a couple different things in a lifetime has a massive impact. So learn the lessons for sure, apply them. And the lesson to be learned, honestly, through even what's happening right now is diversify. That is what protects you in these difficult times, is being diversified.
Very true. Very, very true. Perfect. Well, I think we touched on everything that I wanted to speak about. Anything else that you want? This
was a great conversation. I'm sure.
Yeah.
We could go on forever, but maybe that's for a future episode.
There we go.
Will be for a future episode.
Perfect. So thank you so much for your time, Natasha. Where should people, if they want to get in touch with you, best way to get in touch?
You can find me pretty well anywhere. Look me up, but our CIR website is phipsgroup.ca if you want to reach out to the team. We're an investment-focused team doing residential, commercial, and property management here in Calgary. And if you want to learn about Wealthshare, you can go to wealthshare.ca, and you can invest with us with as little as $5,000 or more. So we are very passionate about both sides of the business and believe people should be investing passively and actively, and would love to connect. And I'm addicted to real estate still, so reach out anytime.
Awesome. Thank you so much for the time. Appreciate it.
Thanks for having me.
Thank you.
That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.